Hello traders, and I hope that you're all keeping well and keeping safe. Now I do apologize, it's been a while since my last video, but yeah, I haven't been feeling too great, so I'm gonna try. But yeah, I've received a lot of messages, and also thank you for the messages that you guys have been giving me, as well as the team. And yeah, so where to begin? So this is going to be a breakdown of a trade. So this is the pound yen. Now I received a message, and to be honest, this message was very humbling to read. To be fair, all of them are, and some of the comments have been great, and I'm glad that we're giving you as much value as possible. Because for me, I feel like obviously, you know, I didn't think that this many people would take as much value from it, but yeah, it's been crazy, and I'm yeah, it makes my day. But yeah, thank you for being patient. I know that I haven't uploaded as much, but let's do a breakdown of pound yen. Now, before I actually get to it, um, what you need to realize is, and I mentioned it in the Telegram, is why we trade with rules. Now, trading with rules is very has its pros and cons, okay, like any other way. But the main thing with rules is, say for example, you're looking at this trade, right? And let's just go back to here. So if you're trading with rules, for example, like let's just make up some rules here. So the first thing you have to confirm whether you're looking for a buy or sell, you need to have a breaker structure, right? So the breaker structure that's happening here is bullish, okay? So we can see that here. Now, for you to, that could be your first rule, for example. So if you see a bullish break, you know that the only thing you're looking for is a buy. Okay. The next thing you want to look for, and while I'm saying the rules, by the way, these aren't fixed rules that we use at Vertex. We have a bit more complex rules, but I'm just making up some rules that you can probably use. Okay. So let me type this out so you guys can keep it. So the first rule is a break or structure. So break or structure is BOS. Okay. First thing. Okay. This will decide if buying or selling. Okay. Okay. So that's the first thing. Okay. That's rule number one. The second rule you probably could have is looking at the extreme. Okay. So let me put that in here. So finding the extreme. Okay, and now you know what range. Let me move this out of the way because it's a bit annoying. Now you know that you are trading within this range, right? You're trading. That's going to be the low. Okay, and the high. Oh, I'm pretty sure I pressed control there. I know why. It's because sorry. It's because I changed my computer today and I haven't got used to this one yet. Let me draw this one here. There we go. Okay, so we know that we're trading in this range. Okay, so that's number two. Okay, let me put number two here. I also did a PDF where you can actually follow the rules that are on there. And if you don't know where the PDF is, join our free Telegram and you'll find it pinned to the chat. Yeah. So let's go all the way back to here. So we're going to look for the extreme, and let's just go to the 5 minute. Now I have seen this trade. Obviously, this trade isn't mine, so I'm just making that clear. So you're going to look for the most extreme point. So let's go right to the bottom and work our way up. Okay. So what you're going to look for is, if you're looking at this OB here, it didn't really break structure, so it's not even OB. So we're not going to call it that. So let's get rid of that. We don't need to worry about it. But the next move comes and breaks this structure. This structure break originated from down here. And what do we see? It's a very clear OB, right? So what we're going to do is just going to mark this out. So this is your third step. And I don't know why it's so difficult just to click it. Right, so that's what our entry is going to be. Now, if you're worrying about this, because obviously these are clear, you have to think about that this is already mitigated, even if they're not OBs, but it's already mitigated. It could be something on a lower time frame because obviously we had this little rise and a dip, so it could be a structure break here, but for me it's not clear. Okay, so what can we see is this is where our order is going to be. Let me try and make this as precise. There we go. So we know that our order is here. So let's go back to the 4 hour. So we know, so our first rule is obviously our break of structure. So let that happen. So, damn. There we go. Okay, so we let this happen. Then the next thing is obviously finding your extreme point. Okay, you know that the range that you're trading in. Okay, now we already know our target as well is going to be aiming for that high. Okay, so we already have that in place. But if you think about it with rules, if you have these rules and if they're consistent, and the main thing about backtesting is backtesting it to find if your edge is consistent, then if your rules are consistent, your edge is consistent, you should see in theory consistent results. Now that's why I adopt a rule-based strategy. Now, which is why it's a little bit different from most smart money concepts. I think the concept overall is pretty much going to be the same, but our entry criteria is very different compared to, well, it's different in the sense that we have set rules to do that, because there's no guesswork, because we want to be able to look at a chart and confirm certain things. Like we've got a rule just to confirm if a trend is bullish or bearish, right? So that's how we work, and that's why consistency is there. That's what we focus on. But yeah, without talking too much, but we already marked out our order now, and the main thing you have to do now is obviously place your order. So we know it's going to be, it's there. Our stop loss is going to be below here, so let's just put it below. Okay, let's just put a round figure, 6 pips. I don't know what risk reward he had, to be fair. Well, I don't know what stop loss he had, actually. I didn't ask. I should have asked him before. I should have asked. Yeah, I'll have a word with him actually. But what we can see is obviously if we play this out and we've got, it's moving towards TP, so it's currently running at what's it running at? It's currently running at 22R. So yeah, he must have got a tighter stop. I believe he would have. So this is even without speaking to him. I believe, yeah, he would have 50%ed it. Yeah, perfect. He would have got 50% on. Oh gosh, that's a beautiful entry. Could have got 50%, and he obviously could have got a tight stop. We could put a 3 pip stop there, and that turns that into a 60R trade. That is nuts. So like, fair play obviously for taking the trade. But I just want to introduce what rule-based trading actually is, you know, it's not as scary as it sounds. It makes things so much easier, the fact that you have set rules. Now this is something you can devise on your own, right? You don't need to, you don't need to buy our course to do that. But the difference between us is that we have a rule base to actually enter. We don't enter like this, because for us, this is what we call a risk entry. Obviously, what you'll probably realize is the strike rate may not be great, but with your win, if your strike rate is not great, but your edge is solid, in that sense, it does balance out. I'm not saying it's great to obviously lose. And sometimes you can have sometimes you can have a losing streak, but in the sense that, when you're, say for example, like this trade hits TP, right? If it does, should it get there, that'd be 59R, right? You need to lose 59 trades to be back at break even. So think about it in that sense. But obviously strike rate may not be ideal for some of you, depending on how you are emotionally with trading. But yeah, this is a perfect trade, perfect example. And yeah, I hope this has helped some of you guys and introduced you to what rule-based trading actually is. But yeah, if you want to find out more, obviously drop us a message, either on email, on Telegram, or however you like. Be sure to like and subscribe this video. Well, if you like this video, feel free to like it. What else should I say? Obviously join our Telegram, where we share free content as well. And yeah, as I said, I'm going to try pumping out as much videos as I can for you guys, to give you guys as much content as possible free here on YouTube, because trading should be open to everyone. But yeah, as I always say, is obviously when you join Vertex, the main thing you're paying for is my time, and I can assure you the time that you get from us is extremely valuable because, for example, our course may eventually be leaked. I don't know. And if it does get leaked, obviously, uh, we just lost a loyal member of the group. But the course is worthless if you don't have that support, and that's essentially what you're paying for. But also, we do have a discount on the bootcamp, which is on January the 23rd to 24th. You get £500 off by using the code NY500, and when you go to the checkout. But for now, I'll leave you guys be, and I hope you all trade safe and have a well, actually, I was going to say have a good evening, but I'm in the UK, so and you guys can be forever. But yeah, enjoy the rest of your day.